LLC or S-Corp? That is the wrong question. Almost every business owner asks me, which one should they be? And it sounds like you're choosing between two different versions of the same thing. You're not. An LLC is a legal structure. It lives at the state level. Its job is to put up a wall of protection between your business and your personal life. An S-Corp is a tax decision. Is you telling the IRS how you want to be taxed. Different categories entirely. So the real question isn't an LLC or an S-Corp. It is whether your LLC should be taxed as an S-Corp. I am Miguel Palma, 30 years in tax strategy and advising business clients, trained at Deloitte and PricewaterhouseCoopers. We are a firm working with business owners nationwide. Here is how the money actually moves. If you own a single member LLC and you never made an election, the IRS will treat you as a sole proprietor. Your whole profit hits your personal return, and most of it carries self-employment tax, Social Security, and Medicare tax on top of your income tax. Make the S-Corp election and you split that profit. Part becomes a W-2 salary subject to payroll tax, and the rest of it can come out as distributions that are not subject to payroll tax. That gap between a reasonable salary and profits, that's where the savings live. Your income tax bracket does not change. What changes is what part of the profit is subject to self-employment tax. The IRS measures your wages by real factors, and here's a rule that trips up people. You can set your salary as a token amount and call the rest distribution. However, the law requires reasonable compensation, which is measured by these factors: your training and experience, your duties, how many hours you work, and what a business would pay someone to replace you. Set it too low and they can reclassify those distributions as wages, triggering self-employment taxes, penalties, and interest. Of course, I've done that exactly more than once. And here's the catch most people miss. There's a point where the savings shrink. Social Security tax stops on wages at $184,500 in 2026. Above it, only Medicare keeps going at 2.9% on all wages, plus another 0.9% if your income exceeds the threshold for your filing status, $200,000 if you're single, or $250,000 if you're married filing jointly. So once your reasonable salary is already near the base, the extra savings on distributions get thin, and you're still paying for payroll, a separate corporate tax return, and you're subject to tighter scrutiny. That's why you never figure out your tax savings at 15.3% times distribution. It can save you real money or almost nothing. The answer is in your numbers: the profit, your salary, distribution, your state tax rate, and the additional cost of compliance. If the numbers do work, execution is the whole game. You keep the LLC for protection and file the 2553 on time. Pay yourself a reasonable salary and file the Form 1120S every year. Skip any step, the structure will not hold out. So don't pick based on labels or TikTok tips. Pick based on your numbers. Always consider your exit plan. An LLC protects you. Being taxed as an S-Corp may save you money, but neither one replaces tax planning. So make sure you have someone doing it throughout the year. Entity optimization is critical. If you're a business owner doing between $1 to $10 million, and if you're not sure if your entity structure is actually saving you money, there's a link in the description to book your free tax assessment. We will look at your profit, your salary, and distributions and tell you whether being taxed as an S-Corp is actually working for you. The math is better run before year end, not after. No pressure. You'll walk away with clarity.